It's April 1st in Oklahoma City, and here is your market recap for the month of March. Month of March, we had ending out with 563 cases of COVID-19 in Oklahoma, resulting in 23 deaths. The housing market responds by ceasing all evictions till April 14th at the absolute earliest. The sheriff's sale auctions have officially terminated until otherwise noted, and total sales volume for March is down 15%, with light at the end of the tunnel with an increase of 8% in per square foot prices. This and more on today's episode.
From the middle of America, welcome to the Oklahoma City Real Estate Show, covering local market data, news, and reports to arm you with information you need to empower your investing and strengthen your American rights. Top realtor, investor, husband, father, and veteran. Here is your host, Landon Whitt. For more information and to listen or watch online, visit okcrealestateshow.com.
Oklahoma City housing numbers we're going to get into in just a moment, but I wanted to cover some of the top changes for the nation that are affecting the Oklahoma City housing market and surrounding markets. A couple of these notes. We've really been slammed with a lot of news here. Generally, we search hard to find news, and we're getting inundated with news. I've waited till the last moment to be able to present this because I wanted to get the full March numbers out. March numbers are here. We're going to get into those numbers in just a moment. Wanted to talk just a minute about the FHA guideline changes that rolled out yesterday, Tuesday. Today is April 1st, so that was on the 31st of March. Income and asset verification changes for FHA-backed loans changed from 120 days to 60 days. This means if your credit score was great 120 days ago when they pulled your credit, the lender is now required to have a credit score and asset verification within 2 months of your closing date. That could affect some of you that have tried to go ahead and close with a file, but you've got a change to your credit score due to some impact or late payments. So if you are buying right now, make sure to not miss a payment until after you close. Obviously, no one wants to miss payments, but it is absolutely paramount. When using stocks for assets, only 70% of the value can be used now towards assets for FHA loans. And receipts of the funds, if you're going to be using your stock portfolio for your down payment, okay, or cashing out your 401k and use of down payment, you must now provide receipt of that sale prior to the down payment being used. All of these changes will go into effect April 14th. Some positive changes to the FHA come in the form of appraisal. They've loosened the reins on appraisal requirements, no longer requiring that appraisers go into the properties. However, it's preferred, but strongly encouraged not to, okay? So you've got this waging war. Now, I saw today, the Appraisal Today magazine released to all their appraisers on the inline channel saying you should be charging exorbitant rates to go inside of properties. They're warning all their appraisers to do drive-by appraisals. If it requires an interior appraisal, you are going to pay more. Why? Because the appraisers feel that's a danger to themselves, and so they're going to raise the cost collectively on interior appraisals. Now, I spoke with Valor Bank, a great connection here in Oklahoma City. They said that their lender requirements, they work with 5 of the biggest lenders in the nation, they've changed to drive-by appraisals. So if your home, your seller, if you're a seller right now and you're using an FHA loan or even a Fannie and Freddie Mac loan, okay, these are all conforming loans, and your appraiser is going to do a drive-by appraisal, it's extremely important for you or your agent to list all the upgrades. We're doing info sheets now where we print off the sheet and we list line by line all the upgrades in the house. Make sure your pictures are precise. When we market, sometimes as agents, we only put a certain amount of pictures on the listing. Why? Because we want people to come into the house. We want to meet you. We want to help explain the house. Once that's over, you need to put every single photo you can onto your MLS listing or your Zillow listing so that the appraiser can have every possible view to see every upgrade that you've done, because they are not doing interior upgrades. Another thing that's extremely important is if your square foot price in the county record is not correct, that could affect your appraisal greatly, because they're no longer going inside to measure these houses. Some of the appraisers will go through the method of measuring the outside, but I guarantee you they are only going to do the bare minimum during this time, and this time could last for quite a while. So be very precise to keep the value going of your property. Sale of missed payments, let's talk about that for a minute. Loan forbearance going into effect very, very, very soon here. Let's just say in these just scope of scale numbers, if 25% of Americans delay their payments 3 months, we're looking at $36 billion. Now, investors that own these loans have mortgage servicers that collect the payment. Because of the way mortgage-backed securities work, they're the most stable asset that you can buy, or investment security. They always will pay out, which means if you miss a payment, your loan servicer will continue making that payment to the investor. What does that mean? Loan servicers are the ones that are going to eat this in the face when we talk about 25% people going without paying their mortgage payment. That's $36 billion. Now let's stretch that out to, let's say, 9 months. That comes out to be $100 billion in missed payments. Very quickly, mortgage servicers not having deep enough pockets to cover that deficit. This is why the new stimulus package will potentially cover the mortgage servicers with the Federal Reserve to back them out of this situation. All of this creating the perfect recipe for making FHA 3.5% down payment loans, really anything under 10% down payment, a very, very, very complicated measure, because underwriters are working very hard to make sure very, very well qualified buyers are able to purchase these homes. So if you are on the edge with your credit score under 620, you need to be paying attention now with your buyers if you're a real estate agent, or with your, as a seller, you need to make sure you're asking, where does your buyer work? What do you do? And that is not outside the lines to find out if they have solid income. I would be calling their lender. As a real estate agent, as a listing agent, I call the lender and, hey, I have a conversation about the quality of that candidate. Now, they have to be very specific with what they cannot tell you, right? They can't tell you very detailed about their financial information, because that's protected. But they can tell you things that will help you understand the quality of this candidate. And in this day and age, it's okay asking the buyer, where do you work? What do you do? If they're in medical, if they're in transportation, if they're in government, okay, good stuff. If they're in restaurant business, if they're in bar, if they own a restaurant, maybe not the time to accept that offer. So think about these things. But let's get into the March numbers here on our screens here. I want to show you these numbers. Okay, welcome to the InfoSpark screen here. I want to look at closed sales for the month of March. Each one of these bars here resembling a year. So this is 2020, 2019, 2018. This is a comparison of our closed sales for each month, or for the month of March for the last 3 years. Look at this, 15.1% decline in closed sales. This largely due to folks backing out of loans, and also people just retracting for that brief period. Now, I will tell you this, we were touring all this week, and realtors are considered essential personnel first and foremost. If you don't have a shelter, you can't shelter, right? So we've been touring, and I've been just crazy surprised by the fact of other people touring, and I'm putting in an offer, and I'm up against 3, 4, 5, 6 offers. So let's look at how that plays out. We've got price per square foot. Look at that. Highest we've seen, coming in at an 8.3% increase in price per square foot. Let's see how that looks out on the line. Bam. This is going all the way back to 2007 here. highest per square foot price we've ever touched in Oklahoma City happened this month. Remember, folks, I posted on the Oklahoma City Real Estate Show Facebook page, and we also talked about some other things, are the last three of the last 5 recessions, and we'll see if we can get that graphic up. 3 of the last 5 recessions, housing prices actually rose, okay? And even during the worst housing price crash of 2008, Oklahoma City only went down 7%. Folks, linear market investing, linear market buying is something really amazing when we come to recessions. Oklahoma City has often been quoted a recession-proof city, and here is why. Let's look back at these numbers. So if you owned a home $500,000 or higher in value, look at this. I'm going to go to our bar graph. Price per square foot, $213 per square foot. Again, 12.1% increase in closings. Check this out. When we talk about closed sales, right in line. 500 and up category hasn't changed at all. Same as it was last year, okay? So interesting metric applied here. This housing crisis situation that we've got here, okay? This little short COVID response mainly will hit the cheaper home bracket. It's the complete opposite of what you would think. Why? Because now lending is going to be really topsy-turvy when it comes to qualifying buyers. If you've got 10% or 20% to put down, the interest rates are low right now. The purchasing on the higher end is going very, very well, which is why we are re-gearing our focus now to supporting our luxury buyers during this time. These are great opportunities to refinance your home, great opportunities to get into that larger square foot that you've been waiting to get into. Now is the time for that. If you are in a stable career field. If you are not, if you're in oil and gas right now, you need to tap the brakes and talk to me about reassessing your current portfolio, looking at some strategies that we can do to pivot to make sure you're coming out ahead. Folks, I'm trying to keep these videos short. I've had some feedback saying that you guys are busy hustling, trying to save your businesses and keep everybody afloat. Hang in there. The key word, hang in there. Be smart, be intelligent, be an entrepreneur like I know that you are, and we're going to come out of this excellent. Check us out for more news at okcrealestateshow.com. And wait just a minute. Hit that button. If you're listening on YouTube, hit that like button. Let the YouTube algorithm know that we matter, and we'll grow and provide more content to you. Thank you very much.
For more information and to listen or watch online, visit okcrealestateshow.com.